Well, today, Australia's biggest four banks upgraded their forecast for Australia's economy into the first quarter of this year, despite the latest trade data showing that we earned less from exports and we imported more. The company profits were up 4.7% for the quarter, 19.9% for the past year, mainly as a result of booming conditions for mining companies. So let's bring in here independent economist Warren Hogan, also a consultant for the small business lender Judo Bank. Warren, this is a key right now. Jim Chalmers, the new treasurer, is kind of talking down the economy, saying there's big challenges ahead. What you look at with these numbers and potentially what you're going to see tomorrow is an economy that's still booming.
Well, it's doing very well. We're going to get growth of near 1% in the quarter. Annual rate will be around 3%. And that's the new normal.
So no recession?
Definitely no recession. No recession this year. And I think, looking into 2023, I think a lot of people are going to be surprised by the resilience of the economy, and these numbers highlight the point. Good, strong consumer demand, business investment.
Okay, so I want to bring in here this particular chart. Now have a look at this, because before today, and these numbers that came out, these trade numbers, NAB had a quarterly forecast of 0.1%, and I think its annual forecast for economic growth tomorrow was 2.3%. But all of those banks have upgraded their forecasts on what happened today. Now, if trade was taking something away from the economy, because the trade numbers were skinnier, what was it that caused those banks to upgrade their forecasts?
Well, the big one was wages and profits. The income side of the economy was doing very well. As you reported there, we've seen miners kick in half the profit increase in the quarter, so a very strong external sector driving that. And then, of course, inventories, which have been very lean. And it's good to see Australian businesses now actually able to build inventory despite all the supply chain disruptions and despite strong demand. So that's a good sign that they're well positioned at the start of 2022. All of that has been upward movement. And then, of course, public spending also was higher than expected.
OK, so does this take pressure off the budget and off the Treasurer, even off the Labor Party, given the fact that it is going to spend more than what the coalition might have spent had it won government, which it obviously did not?
Yeah, well, look, these numbers, and I think the quarter we're currently in, which will form the basis for the budget, will be pretty good. We'll see the trade numbers swing around. I think consumption is going to remain pretty good into Q2. So they'll have a strong platform to build, but they're going to be trying to create a narrative looking forward. The effects of higher inflation, higher rates, rising business stress, rising household stress, as the APRA head just pointed to. So I think that's going to remain their narrative, despite the fact their starting point on taking government is very strong.
OK, because when you looked at the Department of Finance numbers that were out last Friday, it showed that the budget, which was the last month of the coalition basically running it, if you like, was significantly ahead of even where it was back in December, where all the forecasts were. And the budget this year, even the underlying deficit, is going to be significantly better than the government had ever anticipated.
Well, we're obviously getting the benefit of the high commodity prices. This is probably the Ukraine effect as well. So higher income taxes coming from the mining.
Lots of people in jobs paying PAYG tax.
Look, I think the unemployment number is coming down quicker than they'd forecast. So that's going to be playing a role there too. And then, of course, the big one's higher inflation. Inflation has a big boost to the budget. It's also costly to the budget, as we're going to find out over the next few years with higher wages for public sector workers, but it also boosts the budget.
So what does it do for interest rates? The Reserve Bank meets next week. What does it do when it sees all this information?
The problem for the economy is inflation. It's a global problem, and that problem has not changed and will not change. The RBA has to get the cash rate up. I think it has to get it up to 2%, maybe even 3% over the next few years, but it has to get going.
Over the next few years or the next few months?
Look, 2 to 3%, I think, is the next few years. I think they're going to be measured, but concerted, and it's going to start, I believe, with a 40 basis point move next week, followed by at least 2 or 3 others in the following months, and maybe a 1.5% cash rate by the end of the year. So it's a big hit.
So they've got to move, and they've got to move pretty quickly as well.
They do.
Warren Hogan, always good to have in the program, and many thanks for your time today.
Thanks, Rob.